and to our witnesses. Mr. Tenev, I'd like to follow up a little bit on payment for order flow and best order execution issues. Democratization of finance is a good and noble goal, but for democracy to work, consumers need transparency and high quality information, and not only about fees, but about order execution quality. Your customers actually don't care directly about who you subcontract order execution to or any payment for order flow, but they need a simple way to compare the execution quality between your app and competing apps or other accounts. And while institutional investors can afford to run their own tests, and they do, and I'm sure Mr. Griffin is normally is quite often on the receiving end of those tests and trying to measure up to his competitors to compete for market share there. The institutional investors have the market power to demand best execution statistics for their prime brokers, and everyday investors do not get the same transparency. In fact, I believe there's an SEC rule 606, that requires brokers to disclose at least some order execution data to institutional investors, but this requirement does not apply to retail investors. So, Mr. Tenev, since Robinhood's mission is to democratize finance for all, I ask, what are the mechanisms that you would accept and support to provide transparent order execution quality statistics so that your customers can engage in a clean apples to apples comparison between other brokers, between your app and other people's apps in terms of the total cost of trading?
Thank you, Congressman, for that very important question. I'm generally in favor of a greater amount of transparency than what we've typically seen in the financial industry. And recently, Robinhood and me personally have engaged publicly on the topic of payment for order flow, short selling, and of course, T+2 and real-time settlement. We do publish 606s via Robinhood Securities that detail our payment for order flow arrangements with various market makers. And just this past year, the industry implemented more detailed 606 requirements, which we of course conform to. Also, back in December of 2020, we released a public page on our website that provided detail about the execution quality, including price improvement that our customers received. And we're proud to announce in 2020, our customers received in aggregate over $1 billion of price improvement on their executions.
Right, but that's not a comparison to your competitors. There are a lot of questions about the accuracy of the best execution reference price. And independent of whether it should be improved, it seems like if I was a customer of you or one of your competitors, what I'd want to see is, I just executed a trade of $2,000 and on average, I got X% better or worse than a reference price. And then over time, and see not only the trade that I just executed, but perhaps a running average over the last month or two that you can compare to the running average of whether you're exceeding some benchmark for trade execution quality that can really be compared with potential competitors. And is that a workable system? Are there difficulties? Is there a reason why industry shouldn't move that way in the name of transparency to customers?
Congressman, this is a very interesting topic to me. I'd love to have the conversation. I don't know if this is the right forum to necessarily ideate and brainstorm on all the solutions, but I just want to say I'd be happy to engage with this in a detailed forum and figure out the right path.
Okay, well, yeah, we do intend to continue to engage with the industry on this subject because it's very easy to make payment for order flow sound really creepy. You're basically selling a list of rubes to the sharks. Okay. On the other hand, you make part of an argument that this can net out positive for consumers, but for it to fully net out positive, they have to be able to make the apples to apples comparison. And so that's, I think really an important issue. And I think that probably your reaction to that, if you found your customers were leaving you because of poor execution quality, you would do what large funds do, which is to split your order flow between multiple order execution firms and then demand of them the best order execution and move your business to whoever does the best for your customers.
Yes, well, Congressman, we already do that. We have 7 market makers.
Shepard Smith here. Thanks for watching CNBC on YouTube.